The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will, and I'm too far off this microphone. I said, let me do this real quick. I said, let me interrupt my charting activities, my trading activities and charting activities to bring this to the people. Seeing all this stuff about how the health status of the president is making the markets dive. That's a lie. Well, not lie. That's maybe lie is the wrong word. Maybe it is, maybe it isn't. Let me just say that the technical perspective is that the markets are moving structured the way that they would have moved. Now, and a news event can make a price fall to a support level or rise to a resistance level it was already headed, but the market doesn't whip around like that, because of the events. Just ask yourself, when was the last time you picked up the phone and called your stockbroker and said, in response to some news, sell my stock? Ask if you know anybody personally who's done that. It doesn't work. People, I don't know why people think that. I do know why. Fundamental analysis folks think that that's the way prices move. No, this price dropped because it was temporarily and momentarily over bought. It's temporarily overbought, which is a natural situation. And what we got here is I'm gonna do a quick little look around. I'm gonna try to be on here real short because I got trading stuff to do. Okay, so we got the S&P 500. I got all this crap on here. It should not. It's kind of like in the way. Basically, maybe a little review from the last time. The last show, I think I showed that we would come down to this general area, and then we would continue rising, and we have a ways to go. So, but what happened today is quite normal. My Elliott wave theory traders will recognize this right off. We are completing a 5-wave pattern, and this pullback was quite normal, just like this one. Look at this pullback. Nobody of note, no world leader that we know of got sick on this day. Okay. This pullback was quite normal. Don't mind this little gap right here. That's a data breach from the signal provider. I checked on other websites, and data is clean. So this was local to this particular feed. Okay, and here too. So this pullback was normal. This one was normal, and this one was normal. Okay, and we're going to continue higher. And we're going to trade up into this area here, and then which we should get there probably next week, middle of next week, and then we're going to have a nice decline. But that one won't be attributed. This is just my opinion. That won't be because somebody got sick either. That'll be because the markets were overbought. Okay, we're going to have a nice pullback and giving everybody a second chance to catch this run higher. Everything is set up for us to have a pretty strong run through the election, through Thanksgiving and Black Friday. Now, after that, when we get towards closer to January or middle of December, January, we'll see. We'll see when we get there. But y'all y'all listening to somebody who's like, been preaching the fear porn and a lot of the bearish arguments. But the charts say this market wants to go higher. Okay, it wants to go higher. Oh, okay. I'm looking at this right here. This is somebody. It may. I don't know if y'all can see this little notification that popped up about Exxon, but the star of the show right now is the dollar. But we'll get to that. But let's take a look at Apple. But first, let's note that this bottom here happened. We started rising on the 24th. I'm looking at Apple because it's the largest stock by market cap. It means that there's more money invested in Apple than any other stock. In fact, if you didn't notice, this is Apple and not the S&P 500 anymore. Look pretty similar. Okay, it too had a pullback. It's headed to make its 5-wave move as well, and it should get up in this area here. And then it too should have a nice pullback, giving us a second chance to buy it if we miss getting in down here. So we should have strength going into the middle of next week, and then we should have a correction at some point next week, and then we're going to be off. This thing is going to pick up speed. Let's see. The last thing I want to look at is gold. Try to make these videos shorter. I've been AWOL on y'all. I'm trying to get back into it. I say maybe if I make the videos shorter. Okay, we got GLD, which is an ETF representing gold. It's one of the largest symbols in the U.S. Stock market that controls gold. It's not the largest, but it's up there. So when you buy GLD, you're buying a lot of gold. Okay, a lot of mutual funds invest in gold via this symbol. So this is one to really, really watch. I started calling for trouble. One, because I'm a dollar side trader. I'm always watching the dollar. So I saw that bottom was in pretty much on the dollar. But we saw here, let's see, back in the day, as this thing was forming, we got a descending triangle. Okay, flat on the bottom, descending on the top. Okay, the floor usually gives way. When I believe I said in some other video that it would, it did. We came back up and tested it. So there are news reports out today about Exxon leading some rally or whatever of oil. It ain't gonna last. It's gonna die. Not die like in, but just being melodramatic about the price. The price is going. Maybe I shouldn't say words like die, tank, crash. As technicians, we really don't like those words because it's what the market is doing is normal. Just as normal as if this rise was normal, then the decline is normal. Okay, keep it in context. So the price did what it should. It should continue going down from here. Gold should fall to about this area, to where we were on like June 30th, around 166 from 172 here. And then it could get a little relief. It's not going to come back and take this out for a while. We'll see once it falls to this level and start rising, then that'll be the period for the bulls to have a chance to cheer it back on to go higher, which I doubt it will happen, but it's too early to really make that call. We'll see when gold gets down here how high it can go. I think it's going to rise up to the level of this descending line, and which should function as resistance. And I think it's going to choke. It's going to die again. That's just my opinion, but we'll see. I reserve the right to change my mind when we get closer to it, based on what the price is doing. It's really a bad habit that I guess I have. You get so much confidence in these symbols and structures that you study. It leads you to kind of make predictions, but it's really better to just wait and watch what happens. But when you can't help it when you really feel convinced about what you're seeing. So when we get down here, we'll see how high it rises. But I'm not a fan of it. But of gold like recovering and going north, I think we're looking at a bigger correction. Let's see. You can look at the video that I had uh, on my channel. It's got the gold bars and the stop sign. If you're really interested in gold and you haven't seen that video, you need to watch it, because my bigger thesis on gold is laid out there. It's chart based. Okay, I go back over, definitely over 100 years. So that's a big study right there. You don't see that all the time. Check it out. Peace. I'm out of here.